In this video, I'm going to be going over my thesis for the small cap cryptocurrency Deus Finance with the ticker symbol DEA. If you're just here to hear the ticker symbol or what cryptocurrency I'm talking about, where you can see it right on my screen right now, so thank you for watching to those people. However, I think that you'll really benefit from hearing my entire thesis, why I think Deus will be successful. And it is actually one of my largest small cap holdings. And since I am making this video on a small cap cryptocurrency, I did want to make the commitment that I will be holding this cryptocurrency for a minimum of 1 month after I upload this video. So any short-term price action that may occur because of me uploading this video, since it's a small cap cryptocurrency, won't directly affect my holdings. So I'm not just trying to make this video, pump the price, and then sell it. I'm trying to really see through the success of this project, or maybe the failure, depending on what happens. Of course, there's risk to everything. I'm not a financial advisor. You should do your own research. Now, the first thing I want to talk about is this weird thing about Deus Finance, which is the fact that they have two tokens. So there is the DEA token, and then there is the Deus token. Now, what I want you to look at here is that you can see that on CoinMarketCap, the Deus Finance, DEUS token has 1,100 people who've added it to their watch list, whereas the DEA token for Deus Finance only has 275 people who have added it to their watch list. Next, if you check Etherscan, you can see that there are only 1,250 holders of the DEA token, whereas there are 4,400 holders of the Deus token. So this brings me to my first point for this cryptocurrency that offers a very large opportunity for investors. And it's simply the fact that I think that they've done a very poor job of explaining the difference between these two tokens and what the use case of these two tokens are. So what's going on behind the scenes? I've been following the community a little bit. I've been watching some of their live streams, some of the updates that they're going to be making in the future, because in fact, they're fairly transparent about it. It's just not that many people really know too much about it yet, or at least a lot of the investors, they just buy the token. They don't really look too much into it. But basically, what the Deus token is, so DEUS, is this token is actually more of a stable coin. It's more of a liquidity coin that Deus uses in their ecosystem. And it's not so much the token, at least in my opinion, that will actually benefit from the growth in the technology and the use of the actual Deus ecosystem. The one that people are going to end up holding long term, so this would be the equivalent, let's say, if you have the Maker coin and then you have the DAI stablecoin. So DEUS is more similar to DAI, and then MKR, the governance token for Maker, is more similar to DEA. So in my opinion, what will happen is as people start to realize the difference, more people will invest in DEA instead of DEUS. And in fact, there has been talks by the developer. I've been watching some of his live streams, and he in fact is also considering rebranding the DEUS, the Deus token, which should be a stable coin, into something like DETH or something like that. So it won't be the Deus coin anymore, and they might do some sort of rebranding to make it more clear for investors, which could cause more capital to flow into the DEA token instead of the DEUS token, as people start to realize that this is really where you're actually investing in the ecosystem. So now that I've talked about the tokens, which is a little bit confusing, I now want to talk about what the Deus project actually aims to do. So if you go to their website, which is Deus Finance, you can then go on their app and you will see that they have a bunch of different options here. And pretty quickly, you'll start to notice that this is sort of similar to a project like Synthetics. So what they're trying to do is they're trying to do synthetic stock trading with oracles and with a vault of money that allows those stocks to be traded, that allows people to make that profit or to make those losses. So if you look here, you can see that they actually have it on two chains right now. So they have it on the mainnet and they have it on XDAI. And so if you go over to XDAI, which is where they have most of their stocks that you can trade, although right now the market is closed, so I won't be able to actually trade any of them, but you can see that they have a very, very long list of supported stocks, and I believe that this will only increase over time. I think they said like something like 5,000 stocks will eventually be supported. You can see here, if I wanted to trade this stock, for example, I can trade XDAI and long or short the stock. And how this works is it goes to the vaults. So if I buy the stock at a specific price, and this is all working at the current moment, then I can basically any profits I make or any losses I make will then go to the vaults. Either the people staking in the vaults will make profit by me losing money on my stock trade, or money will decrease in the vaults if I make profit on my trade. And that's sort of how it works. Now, you might be wondering, well, there's so many other projects that do something similar to this, that have some sort of synthetic stock trading. What makes Deus different from those projects? So other competitors that you might have heard of are Mirror Finance, or UMA, or Synthetics. So for example, UMA, this is a very, very large project. It's $2.5 billion in market cap. If you look at Synthetics, this is even larger, $3.5 billion in market cap. And then you look at Deus, and they're only $80 million in market cap. So it's very early on in their technology. However, how they differentiate themselves is how the technology works, and also their focus on being chain agnostic, which is very important in my trading thesis, which I'll explain in just a second. But first, let me explain some of the differences in technology, hopefully in an easy to understand way. So first off, one of the main differences between Deus Finance and some of these other Synthetics projects is the way that the vaults are set up. Now, the issue with synthetics, whenever you're doing a synthetic asset in cryptocurrency, is that the money has to come from somewhere, right? If I'm trading a stock and I make profit on that trade, so let's say I buy Tesla with a synthetic asset, so I buy D Tesla from Deus Finance, and then Tesla appreciates in price, it goes up in value, and then I decide to sell it. Obviously, the profit has to come from somewhere. And with a lot of these other synthetics protocols, such as Mirror Finance, or I believe Synthetics as well, so SNX I believe also works like this, is you have to put up collateral directly for the asset that you are creating. So let's say that I want to create Tesla on the Synthetics protocol. Then I need to put up collateral in order to create that synthetic Tesla. And then depending on if it goes up or down in value, I will lose or gain collateral, or the amount of collateral that I have to have as the price fluctuates. Now, the issue with this is that whenever you are only putting up collateral for one specific asset, is whenever the asset starts going up in value, then the person who's putting up collateral for that specific asset will want to pull their money out. Because let's say that I'm providing collateral for Tesla and it just keeps going up, then why would I just continue to lose money since I'm putting up collateral for Tesla? Why wouldn't I just liquidate the position or withdraw my collateral and then wait for it to start to go down until I put it back in order to earn that specific staking return or whatever? It just doesn't make sense to have collateral specifically set up for one asset, because the second that it goes in the favor of the trader, then the person putting up the collateral won't want to put up collateral anymore. So how Deus Finance solves this is by having one collateral pool for all of the assets. So similar to traditional finance, in the traditional financial world, a liquidity provider will provide capital for all of the stocks. And then on average, since traders will end up losing money or they'll be about break even, the liquidity provider will not really be losing money. And how they'll be making money is from the trading fees. So that's how liquidity providers are traditionally set up. And that's the model that Deus Finance took in order to make it so that any person that's providing liquidity is not incentivized to withdraw liquidity the second traders start to make money. The other thing that Deus also works on is a lot of the technology behind this, such as the oracles. So it's very important for price oracles looking at external data to be very fast. And I believe from what I've heard, I haven't looked at the code or anything, but from what I've heard, apparently the Deus oracles are very advanced. They try to make the fastest oracles. They do a lot of research on this. And with their team right now, they have about 30 technical developers and only 2 people who are actually marketing the project. So I think that this project is extremely focused on the technical side, and there aren't that many people actually trying to gain exposure for the project. And so I think that there's a lot of opportunity there. And that brings me to my next thing, which is the fact that they are chain agnostic. And that means that they don't necessarily only want to be on Ethereum. They also want to be on other smart contract chains, such as XDAI, other side chains, layer 2 chains, but also Binance Smart Chain, which I think is huge because since this project doesn't really have too much marketing yet, not too many people know about it, I think could provide a very large marketing opportunity because once people on Binance Smart Chain start to see Deus Finance is available to them, and they also plan on eventually adding leverage trading, which would cater perfectly towards people who are on Binance Smart Chain because a lot of people on there like to take very large risks. And if Deus Finance was one of the only offerings on Binance Smart Chain with leverage stock trading, I think a lot of investors on Binance Smart Chain would absolutely love that offering. Anyways, I know this video might have seemed a little bit dense, but I hope you at least learned something about synthetic assets and the Deus Finance project. I think this is a very exciting project. A lot of things need to line up correctly for this project to succeed. The development team still needs to do a lot in order to ensure that, especially from the marketing side. But I believe that for myself, this is a worthy risk to take on. And I hope that you consider this as well as you possibly can, do as much research as you can to develop your own opinion and hopefully take a position in it. Anyways, thank you all so much for watching and see you in the next one.